What's up, everyone? Marcus here with your not so weekly tax tip. So it's tax season, and when it comes to taking qualified deductions on your tax return, having proper documentation to prove your expenditures is a must. So here are some typical areas where taxpayers often fall short, causing them plenty during tax filing season and during IRS audits. All right, so number one, cash donations to charity. Donations of cash, they need to be supported by a canceled check or a receipt from the organization. Donations of $250 or more must have written acknowledgement from the charity at the time of the donation. A canceled check and a bank statement, they are not sufficient. All right. Number two, what about non-cash contributions? So additional support is required for non-cash donations to prove their value. Now, this includes creating a detailed list of items that you donate, its condition, and estimated fair market value. Now, while this level of detail is not required for small donations, it's always good practice to take photos and create a detailed listing of the items that you donate. Number three, let's talk investment purchases and sales. If you bought or you sold an investment, you need to know the original cost, or what they call the cost basis. Today's regulations require brokers or advisors to report the cost of sales to the IRS, but many of these historical costs are reported incorrectly. So review your brokerage accounts and correct any errors. It is very difficult to defend yourself in an audit when records reported to the IRS are wrong. Copies of divorce decrees or even alimony and child support agreements. There are often conflicts between two taxpayers regarding who is claiming a child on their tax return. Do you have the necessary proof to defend your position? The same is true with alimony or child support, right? Keep these documents in a safe place and be ready to use them if necessary. Number five, you got mileage documentation. Now, tracking deductible miles is one of the most commonly overlooked documentation requirements that we see in our practice. Properly recording charitable, medical, and business miles can really add up to a large deduction. If the record is not available, the IRS is quick to disallow your deduction. And then, of course, you need to keep copies of documents from any major financial transaction. This includes any real estate settlement statements, refinancing documents, and any records of major purchases. These documents are necessary to ensure, number one, your cost basis in the property is properly recorded. The documents will also help identify any tax-related items like mortgage insurance, property taxes, points, and possible sales taxes that were paid. Now, if you aren't sure whether a document is important, of course, it's best to retain it and file it in a way that you can easily retrieve it if you need any of those documents or receipts at a later time. So that's all I have for today. Talk to you soon. Until next time.